In exercise 7-15, we're going to use the third way, which is known as the balance sheet approach to estimating the allowance for uncollectible accounts or allowance for bad debts. And that is, we look at the accounts receivable at the end of the year and we say what percentage of this will not be collected. All right, so in this case, we have the Colorado Rocky Cookie Company offers credit terms to all its customers at the end of 2021. Accounts receivable totaled $625,000. The allowance method is used to account for uncollectible accounts. The allowance for uncollectible accounts had a credit balance, which would be the normal balance, of $32,000 at the beginning of 2021, and $21,000 in receivables were written off during the year as uncollectible. Also, $1,200 in cash was received in December from a customer whose account had been previously written off. The company estimates bad debts by applying a percentage of 10% to the accounts receivable during the year. So requirement 1 says prepare journal entries to record the write-off of receivables, the collection of $1,200 from previously written off, and the year-end adjusting entry for bad debt expense. Okay, so the first one is we're going to write off some accounts. We've already done the allowance method. We're going to write off some accounts. And so we're going to use the allowance for uncollectible accounts. And that's going to be $21,000. And we're going to write off accounts receivable for $21,000. All right, now we also found out that, or we also were able to collect $1,200 of an accounts receivable that we'd already written off. So the way we handle that is we reinstate the accounts receivable and then we show the payment for cash. Okay, so we're going to take the, we're going to reinstate the accounts receivable. $1,200, which means we're going to go back and increase our allowance for uncollectible accounts. $1,200. Then we have to go ahead and write the collection. So we get cash for $1,200. And we get rid of the accounts receivable. Now, this is one instance. You've got accounts receivable and accounts receivable here that offset each other. Basically, it's two entries, but it's really done at the same time. And so you can't just write. The reason that you can't just write cash and allowance for as the debit and allowance for uncollectible accounts as the credit for $1,200 is you don't have the accounts receivable, which one it is, because you're going to put it in a subsidiary ledger and you're going to show whose account receivable. So lots of times it'll be accounts receivable like Smith, right? Something like that. It's a specific accounts receivable. So that's the reason you can't just, so you need to show that they're now back in good standing and they paid off their accounts and that sort of thing. All right, so the third part of this is the allowance. So we had $645,000. Oops. And we estimate that we are not going to collect bad debts by applying a 10% to accounts receivable at the end of the year. And so we've got $64,500. So our journal entry to show the bad debt expense will be bad debt expense. $64,500, and allowance for uncollectible accounts. $64,500. So that's your journal entry right there. Okay, and then part 2 says, how would accounts receivable be shown in the 2021 year-end balance sheet? All right, so we've got 2 T accounts, accounts receivable, and we are just told that we have a balance there of $645,000. But we also have this allowance for uncollectible accounts and we were told that we started the year with a credit balance of $32,000, but that we wrote off $21,000, but then we reinstated $1,200, and then we wrote off an additional $64,500. And so we add that all up, 32 plus 1,200 plus 64,500 is 97,700, but then we have to subtract off the 21,000 is 76,700. All right, so 76,700. So our actual balance sheet entry would be accounts receivable, and we would report that net. Okay, so that would be the 645,000 minus the 76,700 would give us 568,300, and that's what we would actually show on our balance sheet. We would do this net, and then in the footnotes of the financial statements, we would explain what our allowance for uncollectible accounts was and what our gross accounts receivable was on that. All right. So that's how we use the balance sheet approach to do allowance for uncollectible accounts.